Hey guys, let's look at the price of Bitcoin and let's be honest with ourselves. The situation looks really bearish. Why it is so? First of all, as you can see, we broke downwards this support line, but this is not the most important point. There is also the 200 EMA on 4 hours time frame, which was very close to this line, and it was broken as well. In fact, this support held during the whole period of this rise, and basically price didn't go below that so far. Now we had this drop, and this would indeed become the beginning of the drop much bigger than we had so far. And in fact, this actually looks pretty scary. So we may say that, okay, it's probably time to sell our trading positions, and at least partially, and then wait for the better entry downwards. And here is what I'm thinking about this. First of all, guys, we have a huge uptrend starting from $3,000, $4,000, and basically usually the global trend is much stronger than the local trend. Local trend right now is bearish, global trend is bullish. So whenever we try to follow the local trend, it's much riskier than following the global trend. However, at the point when the rise was very extreme, somewhere around here, even here, it was much more reasonable to go against this trend because it went pretty much parabolic than at the point like this. Because here we already had like 30%, here is like 20% drop. So it's already a huge correction, it's a huge pullback from the top. So in the same way that during the uptrend, it was getting more and more reasonable to becoming bearish, the same way here, but even more exaggerated. The deeper we go, the more it is reasonable to become bullish, despite this situation. So in this way, I was adding to my position at 11,400, and I also added something like $11,000 as well. So I'm 100% in Bitcoin in my trading position right now, and I'm not going to sell despite of this breakdown. Now here is the point. You see these support levels at $10,800, $10,300 and $9,600 previous low. So the thing is, this drop, as well as this drop actually, led to the fact that the price went in the zone below the previous support, when you'd expect to have a lot of the stop orders, because people which are going long would leave these stop orders below the previous support level. So the price went down to collect the stop orders, which usually happens before the price is going up again. However, at this area, we can see here, the volume was relatively low, so there's not so many stop orders here. So in order to collect more liquidity, we need to go much lower. We need to go somewhere around $9,500, or potentially even below this zone of this trading, something like $8,800, $8,700, which is a huge drop. And in that case, it wouldn't actually look as the preparation for the growth. It would be more likely to be the continuation of the decrease, the major correction. And for example, last time we were looking at the fact that this is A, B, C move, and maybe it is over, so we can look at the new 1, 2, 3, 4, 5 move. So apparently this didn't work out, and this move actually canceled this out. So this is another bearish thing. And our inverted head and shoulders pattern as a consolidation pattern also became invalid because we went pretty low. But again, even despite that, the decrease in the price to much lower area would also face a lot of the support. A lot of the wise, sober traders, investors will try to buy this discount, because apparently they would play the long run. They would say that, okay, we have the high here, and potentially the trend will continue to become higher than this one. So we already have like 30-25% discount, so why not to enter here? And if the price will go even lower, more and more people will try to. So it would really hard to push the price lower and shake out those people. So it's actually the balance between the stop orders in this zone and the newcomers, new buyers at this zone. And speaking about the collection of the stop orders, pretty much the same happened during the previous consolidation over here. So every time the price went down, it actually went down below the previous support levels, which initially were resistance levels, and in this way it collected those stop orders below those levels here, and potentially it should go below $7,500 and maybe even below $6,900, $800. But instead of that, the price consolidated and went up. So I think that the situation might be really similar here, with of course a little bit higher volatility and some scary signals and so on, but technically it's also the same. So instead of going to some crazy low levels, we actually would have enough people waiting for the bigger drop to enter, and instead of having this drop, the market will go without them to the upside. So right now actually there is a question for you whether you want to take the risk and go with the long trend as opposed to this short move, or you want to catch this short trend and ride it while it's really risky actually in a short run as well, because it may appear that this is already at the saturation at the end of this drop. Now I was going to show you one more thing, and we need to go to the daily time frame probably to see it better. So on the daily time frame you see the RSI indicator actually going lower, having lower lows. This one is not formed yet, but still the trend is like this, and strictly speaking the lows here are going up, so technically it's a hidden bullish divergence here. And in principle you can think in the same way here. So we had higher lows here, and even if you'll count this low, that will look like that, but at the same time RSI was going lower. The same was actually at this area. Lows are going higher, but on RSI they are going lower. So you see the trend is actually very similar, and I think indeed we can see the repetition of the same pattern with a bit more exaggeration over here, but at some point instead of making a major correction we actually will go to the upside again. Not necessarily it will happen, but in terms of the probabilities I think it is reasonable to consider that. Finally, I was going to show you our pitchfork which we drew few episodes ago. So this is the pitchfork based on the previous low, high and consecutive low. It played out pretty nicely before with testing all the Fibonacci retracement levels within the pitchfork, and now again this is the point when we were talking about the potential reversal at this level. It didn't happen, instead we went down, so we pierced through the whole zone over here and we stopped exactly at the bottom of this pitchfork. So indeed you can say that this is kind of a moment of truth when we had either the reversal and the price will continue to go within this global trend, well, the rising trend within this correction, or we may break it downwards, and then that would be a warning sign, and our $9,600 is the last hope for the price remaining relatively high. If it will not hold, yeah, then we can see some nasty behavior, but still the volume is going down. You see, similar to here, the volume was going down. So I tend to think that it's, again, in terms of the probabilities, it's more likely that this is over. It is strong already. We are below this 200 periods EMA and 4 hours time frame. We probably will go above it very soon. We'll close the day above it. It will be also a bullish sign. So let's act and let's make our decisions, trading decisions, based on the facts, not our emotions. Maybe though those facts will tell you different thing than they tell to me. So of course it's your decision, and everything which I say is my personal opinion, not a financial advice, but you heard my arguments. Hopefully they make sense. Alright guys, don't forget that everything which I say I also post on the Telegram channel, so if you want to have like live updates, then please join our chat. But in the daily videos I basically summarize what we're discussing there, and yeah, that is it. I hope it was useful. Thank you for watching.